So I trade options and I post my options trades a lot on social media. And, people always ask me in my private messages, to teach them how to trade, um, teach them how to invest. And to be honest, if I really don't know how I could teach somebody how to trade options, but I could uh, give you a good framework in terms of how I look at long-term investments. Because when it comes to options, I usually am just watching lots of news. I follow companies that I find interesting, and most of them are already in my long-term investment portfolio. And then from there, I just follow the news, keep up to date with what's going on, and I try to anticipate what's going to lead more people to buy or sell the stock. That's pretty much my strategy with options. It's just basically timing the market based on the news flow and anticipating other traders' moves. So it's a bit like poker. But that being said, since I'm trading mostly companies I'm already invested in long term, and I think that you have more success with your money investing for the long term versus trading. There's the statistic out there that 99% of traders, I think, are unprofitable. So it's a lose-lose endeavor. So I'll try a bit to share some insight into how I think about investing long term for beginners. So my advice is to start with what you know. It could be, think about your job, your hobbies, products and services you use every day. And, when you're interacting with these things, you want to ask yourself, what companies are providing the product or service? What companies are you actually interacting with? Because you interact with these companies so regularly, you naturally notice things like, is the product getting better or worse over time? Do people around you prefer it or complain about it? Does the company feel like it's getting more popular or losing relevance? And this provides some kind of real world feedback that many professional investors miss, because professional investors spend a lot of time reading models, reading reports, making models, and they often get stuck in the weeds and they can't see the big picture. So for a retail investor like ourselves, it's very helpful for us to take advantage of take advantage of that thing that we do, which is interacting with the products and services that the company provides daily, and being able to assess the quality of the service, being able to assess the development of the company, being able to assess the feedback from our peers, from ourselves in using it, and having that translate into our investment decisions. So once again, start with what you know, your job, hobbies, products and services you use every day. And I say that because these are the companies that you probably already understand how they make money because you're buying from them. You probably understand what works well, and you probably understand what feels frustrating or inefficient when interacting with them. These are not things that directly show up in the numbers. Like the company isn't going to say them outright, but they're things that once you observe them over time, it eventually translates into the numbers. So for instance, if you buy a hair care product and you've been using it for 20 years, and for some reason this year it just feels different, right? Like maybe your hair doesn't have the same shine as it had before. Maybe it doesn't smell the same, and let's say that's because the company, in an effort to cut costs, has decided to use different chemicals. Well, it's very likely that other people have been using that same product and they've come to the same conclusion that you have, which is the product seems to be less good, like it's somewhat more inferior than it was before. And it might not necessarily affect the numbers in the future, but that's a good data point, and that's something you could observe. Maybe they haven't just cut costs in that specific product, they've cut costs in some other products, and it's something they're doing company wide. You notice that immediately as it hits the shelves and you stop buying it. That's a signal, that's a data point. When you're investing for the long term, these observations compound, and they're very insightful over time. So let's say that the change was so atrocious that you decided you're never going to buy this product again. Your friends decide the same thing. You go on social media and people are complaining about it. that might be a good idea for you to not buy the company, right? If you were thinking about buying shares, because obviously they're moving in the wrong direction based on customer feedback. Because at the end of the day, it's all about the customers. If you don't treat the customers right, you're very unlikely to make a lot of money. So I'll give you a scenario. So let's say everything I just mentioned happened. Company has the earnings call, they release results. They might tell the professional investors, hey, we've cut all these costs, earnings are up 50%, for instance, and professional investors are happy, for that one specific quarter, the company's earnings look great because they've cut costs. But you as a consumer, ignore the stock price, because in the short run, the stock price says very little. It's just emotions, it's very psychological. In the long run is when you see usually the fundamentals, like the quality of the business and the price converge. So yeah, in that one quarter, the stock price goes up because, that product or service, they've cut costs in that realm and it's showing up in the earnings. And, but you as a customer, you feel like, holy shit, this is terrible and I'm never going to buy for them again. Your friends are saying the same thing. People on the internet are saying the same thing. Let's say you wanted to short the stock. That means, betting against the stock price going up. I'm not saying this is the only point, but this is a good data point for you to have a contrarian view. And even though the stock price is going up, to bet against it. And that's because what you're observing is something that's happening in real world, real time. And it's something that the professional investors miss. And when they do catch on, their view might converge to yours, because if the product or service is bad, customers stop buying, earnings go down, stock price goes down. There you go, you've made a lot of money. So that's just a little rant of mine. I hope that it could be insightful. To summarize, I guess, start with what you know. Think about things you do in your daily life. Ask yourself what companies are providing these products and services, and then take a view on, the quality of the interactions you have with these products or services. You want to compare them to competitors, see what they're doing better or worse. And that gives you a first step in terms of looking into what companies to invest in.